Here's the
So
first.
is this the biggest one?
No, here's the first investment account. Okay.
Oh, this is all of it. This is him playing around.
All right. There's some stuff in
Robinhood, you're basically, that's your speculative play account.
Yeah, for the most part.
A lot of
Oh, Jack's getting in on this.
Go to the big stuff.
Well,
go to the big stuff.
It's just an interesting to note. Here's a $1 position. Here's a $5 position. Here's a $6.
Those are probably the
position.
free trades that they gave
Let me
us.
see this.
Those
There's
are the
a
free trades, aren't they?
There's a $6 position in US dollars.
There's a $7 position. There's a $12 position.
What? Yeah,
so
it's
one
all-
of the things I'd probably do is clean up a bunch of the single-digit dollar positions.
Oh, some of those I can't close out because they're worth so little that I tried to sell them and they won't let me sell them. So I actually have to go and request this thing from Robinhood.
Or donate
for
them or
to-
something?
Yes,
Point
for them to get rid of them.
0.035 share. Okay,
Yeah,
so that's
just ignore those.
so-
Those are
but
Go look at his big stuff.
Hey, look, we're assessing the whole. You have to look at the whole picture. That's the thing.
Your big assets are the same thing. I mean, they're in tried and true stuff. I mean,
Yeah.
so
And you could be a little
resemble. But I think this is making our point because everybody here, we have decent investment portfolios, everybody at the table, and we're all buying the same similar market type stuff. And that ought to be something for the audience to take a big note of, is to be like, here we are having all these pontifications on the investment marketplace, but if you actually look at what money we're going to live off of in the future, it's the broad markets.
So you just have like a number of different accounts that could likely be consolidated. I'm sure there's some strategy to that.
Are we talking about the investment accounts?
Yeah, there's like just a couple. Like there's a couple of different.
Did you have
investment
like
accounts for
affiliations or
providers.
do programs with some of these things? Because you do have a lot of different companies.
Yeah, I use them all, and I've just kept the investments in there, and they've grown since.
Is that because you were
2017.
curiosity, or you did something with these companies?
No, a lot of those were me just trying out different brokerages, because back in like 2017, I would go and make accounts with every single brokerage out there. Yeah.
Yeah.
And I would use
Does
them.
that not
and
drive
I'd
you
trade it.
crazy?
It drove me crazy. I had accounts at every single brokerage.
Because
and I
the older
closed
you
them
get,
all
I
out.
want more simplicity in my life.
I'm merging a few of these, but I have different accounts for different purposes.
Okay, you've got a health savings account. Love HSAs, right?
Yeah.
You have like $3,600 of cash in your HSA.
I just forgot to invest it.
But that's
He's gonna have a hard time
truthfully,
beating
but
7.5,
on
8
the-
with a
yeah,
you know what I mean?
I know.
But it is the same. I mean, because I was going to pick on because I was like, man, that's around. No, that's account size. That's actually a pretty decent size.
That should be
I left a lot of cash.
But there's no positions in this one.
So is that just cash? What is that?
It's your Roth. There's no positions in here.
It didn't probably translate over from
I
that
really wanna see
brokerage.
that one.
Yeah.
Okay, we want to make sure. That's what I was talking about.
That's 𝗪𝗧𝗡𝗃 in the Roth.
Oh, is all of it? Okay, great.
The entire thing.
Perfect.
Okay,
So
okay.
that's great. The Acorns account cannot see any holdings in that one either.
Yeah, that's 4 ETFs in that account.
Okay, good ones or bad ones?
Good ones.
Okay.
Yeah.
Yeah,
They're all like Vanguardic.
Okay.
Stuff. Yeah.
All right. That's
Yeah,
fine.
I mean,
that's fine.
You don't even classify yourself as an exotic.
Talk about a
'cause-
snooze fest, right?
Yeah.
I mean,
It could be a little bit cleaner. Like I just feel like there's some account consolidation. Like if you were a client, I'd be like, hey, why do you have all these different accounts? Why do you have all these different positions? It might be easier to get your head wrapped around anything, and not because what's interesting is okay. Oh, I forgot to invest that $3,600 of cash. Well, $3,600 of cash can turn into $13,000 of cash just because it didn't. 13,000 can turn into 30. 30 can turn into 100. Like it happens that way pretty quickly. If you have so much stuff that's hard to keep an eye on where
it's
everything
also
is.
easier to compare, to know annualized performance or how well you're doing when things are consolidated. Because you got stuff, I mean, now I'm sure this thing's going to spit out a report somewhere on here where it would tell you, but it's just, there's a lot of scrolling.
Yeah, I have like 12 1099s from different
That's the other part.
And like, does that not like bother you a little bit? Just
I keep track of them all, and then an accountant
Of course
does it
you do.
all,
I think you're naturally good at this
Yeah.
stuff, but that doesn't, just because you have a way of doing this, I don't know that I think it's the most efficient use of your time either.
Now so that's a big one. It seems like maybe not enough to total net worth, but it seems like you're pretty bullish on crypto.
Yeah.
Yeah, but it's still under, I think, 12.
So how much is he up? Does
Yeah.
it show how much he's up? Because we don't have to give the number, but does it? Do you know how much you're up?
Total, I'm up maybe right now at these levels, like 6%.
Okay.
So
Maybe
that's not-
10.
So
maybe
which is
I'm
surprising
up,
because
maybe I'm up
it's a
10%.
decent size holding. To hear you're only up 6% kind of surprises me.
because I have a lot that I bought in 2017, and then a lot that I was buying in 2021, 2, 3, 4, like more like dollar cost average.
So do you
And
think
so-
Bitcoin's going to change the world? Like
I would-
for the term of
I
like
think there's an asymmetric upside that it will do better than it will do worse.
What about all the quantum stuff that people are out there throwing out there as risks?
Bitcoin would be able to change the way it's secured to be quantum resistant. I don't think it's going to be a risk.
And I'm not saying that's a risk. I'm just
because banks are going to have to update
we all
that
have
too.
these headlines thrown across our our feeds, and I just
banks would have to update as well. So it's like, would banking be a risk?
Yeah, it's just a lot of,
and those computers don't necessarily exist yet.
Yeah,
like you have some positions that are like pretty substantial, and then you have some positions that are just very small, relative, right? Like
it's more of a wrangling issue for you, Graham.
Like I got some thoughts on that.
Yeah. So, what would you rate my portfolio out of 10?
Remember you gave Jack a 7.5. I have a number I think you want to say, and I'm curious.
Don't do it because you gave me a 7.5. Just do it independent of me.
I like your,
but you have to know where the scale is.
I like your overall allocation much better. Like I think it seems to be a more well thought out, more robustly diversified portfolio, but it's a little bit sloppier in terms of like cleaning up some stuff, right? So,
well, when he says that, I think, well, I'll let you be because I would skew it. I was talking about the quilts of life. Yours is out of choice, is that you have assets all over the place, different providers. And you said that you went on a journey trying out all the big providers. And I think from a content creation standpoint, that was great. But just ongoing, I would probably try to consolidate to simplify your life so you own more of your time.
And by that, you're saying close down a lot of these brokers.
Yeah, what do they add value?
Do you collapse into one?
If you don't have a business relationship with them and you don't, then why make it where you have to do more compliance for accounting purposes and more just keeping up with it, worried about access and everything else that comes with having more accounts?
True.
Was there a retirement account in there? I don't remember seeing a retirement account.
There was no.
Was there a solo?
There was just a Roth IRA that I had set up. No.
What are you doing?
I just figured
you won't pay your taxes.
My honest thought was, I think that I didn't want to do a 401k because I just think taxes are going to be going up substantially by the time I retire, and I would rather just pay the tax today.
Okay,
in terms of like a Roth
401k.
Roth 401k.
Which I don't think makes sense for you. But if you're going to take that stance, do a Roth 401k. Because you know what's cooler than taxable assets? Completely tax-free assets.
I thought about it, and then I was just like, well, I just kind of want access to it now if I wanted to. Maybe
you
that
just said you don't touch it.
So right now,
you literally said you don't touch it. And
right now,
argument.
Right now, you have access to capital. Like we just saw your accounts. You have access to capital. So starting yesterday, it'd be sort of insane not to start building up 401k, solo 401k assets.
You got to give me a rating.
Oh, yeah.
Give me a rating.
Okay, this is what I want to say. I'm gonna give yours an 8. So yours,
I'm only 0.5 higher than
No,
Jack.
I was thinking the exact same number. I didn't want to color his answer, but I was thinking the exact same thing.
A 7.5 because yours feels a little more emotional. And by the way, 7.5 is great.
Emotional?
Meaning you love your portfolio. Like you make your decisions based on emotion. You said every morning I choose to. That's not a negative thing. Your emotion is I like being
only for a small portion, by the way, as we've discussed.
I completely disagree with that.
And then yours is a little more well thought out, but it's just a little bit sloppy. It could be consolidated. Both of you just are missing some tax opportunities. Like there are like some huge opportunities. So that's not really a portfolio rating. It's more like a financial planning rating. Man, there's some stuff that you could be taking.
So the only thing I should be doing on that though is just not the Roth 401k.
Well, I think there's probably a case to be made that you could do not only a solo 401k, not only load that up, but you could also look at some sort of cash balance plan, which is another way to defer hundreds of thousands of dollars.
I think taxes are going up though. So like, I don't want to defer anything. Like I'd rather just pay the taxes now. Like I
think you can still do the Roth.
Yeah.
You don't have to go as big as these numbers we're talking about, but from a legacy standpoint, you could still do some Roth planning.
Okay.
Let's assume for the moment that tax rates are going to go up.
Yes.
Do you think that so we operate in a progressive tax system, and so a lot of people think, okay, well, tax rates are going to go up. That seems likely. Do you think that you're always going to be in a position where even if tax rates go up in mass, you're going to always be in the highest tax bracket?
Yes.
I think with appropriate and proper planning, that doesn't have to be the case, only because we have clients that live in that world.
The only thing I will say, because I do think at the level Graham's at, that he is probably going to be in the higher tax brackets, but it's more of the opportunity cost of what you could do with the money yourself versus giving it to the government right now. Because that's really what also we're talking about. So if you could save a few $100,000 off your taxes now, that's money you get to keep in your back pocket and deploy if you want to. Now, you don't. That's the thing. I still don't have the why figured out for you, because I think that, that I would want to have a lot of discussion on what you're trying to build for.
Now, really quick, every business is asking themselves the same question. How do we make AI work for us? The possibilities are limitless, but guessing is too risky, and sitting on the sidelines is not an option, because one thing is certain. If you're not doing it, your competitors are already making their move.
And that's where our sponsor NetSuite by Oracle comes in. It's the #1 AI cloud ERP, trusted by over 43,000 businesses to manage everything from financials and inventory to commerce, HR, and CRM, all in one unified system.
When all of your data is in one place, your AI becomes a lot smarter. It doesn't just guess. It knows. NetSuite intelligently automates routine tasks, delivers real-time insights, and helps you make fast, confident decisions that actually help drive growth.
And it's not just an add-on, it's AI that's literally built right into the system that runs your business, helping you cut costs, improve accuracy, and stay ahead of the competition.
Whether your company is making millions or even hundreds of millions, NetSuite gives you visibility and control to keep moving forward. Honestly, if I were building a business of this size, NetSuite's the only company that I have 100% confidence in.
So if your revenues are at least in the 7 figures, get our completely free business guide, Demystifying AI, at netsuite.com/clips.
Again, the guide is free for you at netsuite.com/clips, netsuite.com/clips, with the link down below in the description.